This is the Southside School of Financial Freedom Watch List and Market Report for the week ending May 27th, 2023. Our question this week is, what causes malinvestments? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average increased 1% on Friday, but was down minus 1% for the week. The S&P 500 increased 1.3% on Friday and was up 0.32% for the week. The Nasdaq increased 2.19% on Friday and was up 2.51% for the week. Looking at the week, we can see that there were 7 up finishes versus 8 down finishes for the major indexes. On Monday and Thursday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. On Tuesday and Wednesday, all the major indexes finished down, and on Friday, they all finished up. New unemployment claims were 229,000. Inflation rose 0.4% in April and 4.7% from a year ago. Mortgage demand dropped again to cross back over the 7%. The 2-year Treasury yield increased on Friday. The U.S. Treasury stated that the U.S. could run out of money by June 5th. And the president said that he is optimistic about a debt ceiling deal being done. New unemployment claims, inflation still rising, mortgage demand dropping, the 2-year Treasury yield increasing, the U.S. government running out of money by June 5th, and the president believing that a debt ceiling deal can still be achieved are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the president, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What causes malinvestments? Malinvestments are badly allocated investments businesses and individuals make due to artificially low interest rates and an unsustainable increase in the money supply. Central banks, like the U.S. Federal Reserve, are often blamed for causing malinvestments when they lower interest rates and keep them low for an extended amount of time. Asset prices may be driven artificially high as a result of too much money being invested into too few assets like stocks and real estate, causing those asset bubbles that eventually pop when interest rates go up and the money supply is reduced. Are your stocks in a bubble due to malinvestment caused by the Fed? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can, however, learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside Strategy. You can learn more about the Southside Trading Strategy at SouthsideSchoolOfFinancialFreedom.com. Here is the Southside Trading Watch List from the week ending May 27th, 2023. The strongest performer on the list this week was ChargePoint Holdings Incorporated, ticker symbol CHPT. It's in the third column. It was up 2.04% on Friday and increased 7.06% for the week. ChargePoint Holdings provides electric vehicle charging networks and charging solutions in the United States as well as internationally. It offers a portfolio of hardware, software, and services for commercial, fleet, and residential customers. Looking at a summary of results, you can see that ChargePoint has decreased almost 11% year to date. I did not trade or generate cash flow from ChargePoint this week, but I may in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside Strategy. The Southside Trading Strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index, ETF, SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 ETF SPY. The Southside Portfolio is up 27.61% versus 9.83% up for SPY. A difference of 17.78%. The Southside is beating SPY by almost 18%. The cash flow generated by the Southside Cash Flow System for this week was 2.8% of the portfolio account value. The account value changed by 0.06%. Meanwhile, the S&P 500 ETF SPY changed by 0.32%. Bitcoin watch. Bitcoin lost almost 0.4% this past week and appears to be on the verge of a bull market. Though it is down more than 61% from its all-time high, which was achieved in November 2021, it is up almost 62% year to date. I sold option contracts on 2 positions this week. They were 2 calls that ranged from $6.34 to $65.34. You can get more details, including the total dollar amount of cash flow for the week, on the website SouthsideSchoolOfFinancialFreedom.com. In order to increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3, and they are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.